Spar has taken its discount retail brand SaveMor to Sri Lanka. Since its establishment in 1932 in the Netherlands, Spar has expanded to over 13,900 stores in 48 countries across 4 continents. But the grocery wholesaler is also reviewing operations in Europe after its exit from Poland. SaveMor is focused on the low end of the market, selling basic products including private labels under the same brand at affordable prices. Spar CEO Angelo Swartz joins me via Zoom. Angelo, thank you so much and welcome to On Point. Tell us more a little bit about what has been so attractive about the Sri Lanka market that you have decided to take the brand there.
Yeah, Sri Lanka is a very interesting market for us. It's a joint venture with a local company called Ceylon Biscuits Limited. So what was really attractive for us was that we had some good local partnership and good local knowledge, and a fairly big population of over 22 million people. Makes the market quite attractive, as well as the fact that the market is fairly informal at the moment, moving towards formalization. I guess something that we went through about 20 years ago.
Yeah. What is the planned investment in Sri Lanka and over what period?
As I mentioned, it's a JV. So at this stage, the investment will all be funded through the JV. So nothing from Spar South Africa in the immediate term. And we're really looking at ramping up and getting towards 50 or 60 stores there a year over the next few years.
Yeah. How confident are you about the Sri Lankan leg and its success that will be so different from Poland that you are currently exiting?
I think fundamentally we really have strong local partnership in Sri Lanka. We've been there for over 5 years and been relatively successful. Already seen as one of the most valued brands within Sri Lanka. So the Spar brand has done well there. I think that the partnership with a local trader who has good local knowledge is going to be a big help for us.
Yeah. Let's come back home and talk about the business prospects in South Africa, where your rivals such as Shoprite and Pick n Pay and others are steadily gaining market share. How are you getting into that fold to make sure that you also remain one of the top retailers?
Yeah, I think our position as the second biggest food retailer in the country is well cemented, and I think we'll continue to do that. We've had a relatively strong year at retail this year, although our wholesale sales haven't been as good. So we've managed to maintain market share and grow market share in liquor in particular. As you know, our Tops brand is exceptionally strong.
Yeah.
Within the food market, as I say, we've maintained market share, not really grown market share, which is something that's quite disappointing to us, and we have some plans in place for the year ahead. I think given how tough the economy is, all retailers are focusing on delivering as much value to consumers as possible, and we will be no different in that regard.
Yeah. You're also currently reviewing the Switzerland and UK market. How close are you to making a decision on those two?
Yes, we've indicated to the market that we're considering a strategic review of our European operations. We've settled down in Ireland and really comfortable with our investment there. Our investment in the southwest of England as well as Switzerland is something that we're still considering, and we've indicated that we will make a decision by the end of June this year, right. by mid-year 2025.
Right. At a time when consumers want to save as much as possible, even though, things looking a little bit better in terms of inflation-wise, etc. But how are you addressing the price perceptions that some of the customers may have that Spar is slightly higher than its competitors?
Yeah, I think that's something, a perception that we've struggled with for some time. Mm-hmm. That being said, in many of our communities, particularly township and rural communities, our price competitiveness is something that goes without saying, and consumers really have flocked to the Spar brand in those areas. With the rest of the brand, I think we're busy positioning the brand as strongly as we can in terms of our price positioning, but also to ensure that consumers see the value in the Spar brand, not simply in terms of price, but what they get, quality relative to price.
Yeah. What are some of the operational inefficiencies and some financial challenges that you may be looking into, particularly in your local market, the Spar South Africa brand, to make sure that you press ahead with the changes that you've said that you wanted to make?
Yeah, so we're busy with with quite an intensive review of our target operating model, looking at our 6 distribution centers around South Africa, as well as our Build It business, and looking at every area of the business, whether that be in terms of pricing, procurement, our network of distribution centers, and getting and how cheaply we get goods to consumers and to stores. So we're leaving no stone unturned in terms of reviewing how efficient we can be as a business.
Yeah. Angelo, when we look at macroeconomics, perceptions are looking better. Things are looking better in terms of interest rate-wise, inflation-wise, although consumers are still considerably highly indebted, but they still flock to retailers like Spar to come in. Are you seeing changes in the baskets that consumers are having right now compared to a year ago? Can you tell us about that?
Yeah, I think there's definitely a bit more positivity in the broader economy, and that's certainly flowing through into retailers. I think we're seeing that more in the durable areas of our business, and in particular for Spar, our Build It business has seen some strong growth in the last few months, which indicates consumers really looking at renovating their houses and that they've got a bit more money in their back pockets, and we think that will continue for some time. In terms of the food business, we are seeing an uptick in sales, although not dramatically.
Yeah. At the end of the day, for a business to thrive, it needs an enabling environment, whether it's politically or economically. And with the formation of the GNU, a lot of companies have expressed positive sentiment. How do you see this new government and how it will enable Spar to increase its sales or to just basically thrive in the retail space?
Yeah, I think all countries really operate within a greater macro environment, and for us in South Africa, obviously that environment is highly impacted by the politics and I guess the politics of the country. I think with the GNU having now been in place for quite some time, and the stability that appears to have brought, I think that's been really good. There's also been a lot more positive sentiment about South Africa as an investment destination. A lot more foreign funds appear to be flowing into the country, and that is supported for all of us. And I really think that bodes well for the year ahead.
Right. Angelo, thank you so much for your time and joining us on Point. I've been speaking to the CEO of Spar, Angelo Swartz. Thank you so much for your time, sir.
Thank you very much.